Hello, and welcome to Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachari, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation. Hey, Samir.
Hey, Sudhar.
Welcome back to our fourth episode. Thank you, everyone. We appreciate all the support. It's kind of an interesting time of the year. So Samir and I debated if we should have an episode towards the end of the year, or should we wait for the new year? And then we decided that I think we had an interesting perspective to share. And so we said, okay, our audience have been used to our format of picking a topic and then a 30-minute topic discussion over the last three episodes. But we said we'll do something different. So Samir, I'll let you kind of introduce what are we doing today and why it's different.
Yeah. So look, it's towards the end of the year. I will end my year with today as the last work day, for example. It's time of year when people are probably done with their budgeting and 2024 sort of strategic planning. But thinking about 24 is what is typically on people's minds, and the publications out there are no different. Everybody has their what trend to watch out for. Certainly insurance and insurance tech is no different. Lots of LinkedIn posts, lots of articles, lots of magazine space spent on this, podcasts, etc. And I think I myself and others kind of I talk to on a more regular basis, I work with, we don't really put much stock into this predict what's in the future, because who has a crystal ball really? And what we find better is to focus on what we can actually control. So I didn't want to do an episode around tech trends in insurance to watch for. So instead, I think looking at a few recent articles that we've come across that might be worthwhile for others to be aware of, I thought would be an interesting idea and format for today's episode.
And even when you and I did the research, I felt like that the trends predictions were falling flat, in my opinion, and it only reinforced our belief that it's just exactly why we started the podcast, right, Samir? Is that insurance technology and the life of insurance technology executives, our primary audience, I think is extremely complex and nuanced. But for the most part, at least the mainstream publication that we've seen in terms of prediction trends seem to have fallen flat. And what I mean by that is it's kind of saying what, for the most part, it's superficially we all know at a high level. And this is one of the examples which prompted us to say, hey, do we want to go down this path or take a slightly different path, right?
Yeah, absolutely. I mean, this is an example from a reputable source, right? What's important to CIOs in 2024. Right here, you see modernize data to unlock value, prioritize cloud engineering, evolve your IT operating models, scale Gen AI for new business models, and innovate through emerging tech. And my immediate reaction, right, is that, you sort of forget about in 2024, is this just what's important to CIOs? Maybe the only time relevant item is this Gen AI piece, right? Otherwise, yeah, you should always be modernizing your data to unlock value. You should always be prioritizing your engineering. The cloud engineering part, maybe it's relevant, but it has nothing to do with 2024 specifically. It's just the era that we're in. Evolve your IT operating model, innovate through emerging tech. So there's just an example, right? That not really too much interesting perspective here to discuss. Anyhow, so
But what I was thinking is like, but that underwhelms me because it sounds like it's saying what we have always known, and that it makes it look like our industry is not moving, or there's not a whole lot of interesting changes. But then I want to pivot to big news of the week.
yeah.
And depending on if you're in the life insurance industry, especially focused on North America, this was the title alone was interesting, but then the news behind the title is even more interesting. So I'll kind of let you launch us into that discussion.
So there we go, right? So Ebix reaches stalking horse sale agreement for life insurance and annuity business with Zinnia to ensure successful recapitalization efforts. Mouthful, of a headline. What is stalking horse sale agreement? So stalking horse, a horse or figure like a horse behind which a hunter stalks game. Probably not what they mean. Something used to mask a purpose. So that seems like what they're going for, right? That it's a sale agreement that is masking the purpose. So what is that purpose? So you read further, right? To ensure successful recapitalization efforts. So what they're getting at is further down, right? That Ebix has filed for chapter protection under Chapter 11 of the U.S. Bankruptcy Code. So,
And this is a big deal. I think I have a ton of respect for Ebix. So also for Zinnia, which used to be SC2. So I think these guys are all big players with a ton of presence in the life and annuity space. So, but to hear this kind of a news, I think I have mixed feelings about this. Like, what would be the impact? What would be the ripple effect, etc.
yeah, absolutely, right. And so, what are they selling? They've agreed to sell the life insurance and annuity business. So, what does that mean? Ebix is a software company, right? So, further down, they actually even just listed out that they're talking about AnnuityNet, which is their exchange for transaction processing and order entry for annuities, WinFlex, which is an illustration tool, the policy processor, which is their new business origination and underwriting platform, and Smart Office, which is a company they had bought many years ago, which has a CRM tool. So it's the software assets which are being sold. And these are not insignificant, right? AnnuityNet is widely used. WinFlex is probably one of two leading care illustration tools used by lots of independent agents and brokers. TPP as well, right? There's probably three or four leading underwriting platforms. TPP comes up whenever I do these kinds of software evals. And Smart Office in particular is very popular in the financial advisor space, small business CRM. So anyhow, right?
I can only imagine all of the mid to top tier carriers. Hopefully they got the news as well, and I'm sure there will be customer communications flying out of Ebix account managers in the beginning of the year about what this means and etc.
Yeah, and it'll be interesting to see what comes out with Zinnia taking over this and folding them into their offering. Right, they have aspirations to be the platform for life insurance in the future, along with some of their other assets that they already have. Some of the competitors, in fact, right, one of the other leading illustration platforms is already part of Zinnia now. So
Yeah, no,
Anyways,
I'm
so yes, this is an interesting article. If anybody had not caught it, I would be surprised if folks haven't heard it, specifically in the life space. But for others, it's worth keeping an eye out on and looking into if you have any exposure here.
yeah, no, thanks for bringing this up.
Next up, right? So I think you had this one come across your reading
So this
desk.
one, yeah. So Samir, I picked this one primarily because it was from a slightly different source, not particularly about the insurance sector or the insurance technology, but certainly from the IT CIO perspective. And this was also a recent article that was proposing this whole idea that, is it even worth measuring developer productivity? And a bunch of CIOs, including a few insurance CIOs, weighed in on this. But the gist of it was with GitHub Copilot and ChatGPT's coding prowess. Should we challenge our developers to be churning out more code and more features out faster, cheaper, better, or should we still be focused on what, in humble opinion, has always been the focus, is like, are we delivering business outcomes, business value, and measurable value at a right, healthy, sustainable pace? I don't think the article necessarily said it's worth measuring. I think that there's different perspectives, just as everybody else has different perspectives on this. But I thought it's worth for our audience to highlight, because I got to assume like all of our CIOs are one, appreciating the productivity gain they're getting, but also weighing in on like, what does that mean for my business, right?
Yeah. So I think when I, read this once you shared it, my first reaction was that this, of course, presumes that you can, in fact, measure software developer productivity. And within the, academic space, and not just academics, but even practitioner space among software engineers, there is, in fact, a perspective that developer productivity cannot be measured. And this is coming from the perspective that, well, any metric that one picks to measure developer productivity turns out to be a problematic metric. And just as an example, right, you could pick how long it took to implement a feature. And the unit of that measurement would be time, right? How long did it take? So, of course, you can measure the time it takes, but what you cannot measure is what was that feature worth, right? What is the numerator there? Is it just that it was one feature in so many units of time? Well, maybe I worked on a complex feature and my colleague worked on a simpler one and ended up doing three of features in that same amount of time. So the numerator is not comparable. So how can you measure this
Correct.
compared to productivity? And so, not to belabor the point, but you pick any measure that we have come up with, lines of code or number of bugs or number of source code files or any aspect like that, it ends up being a problematic measure. So can it in fact be measured, right? Is prior to, is it worth measuring?
Correct. And is it even worth measuring is where I would land. Is I probably not worth measuring. If anything, you expect a higher degree of business value coming out, and your business should be seeing those value in terms of either a top line or customer experience improvement and things of that nature, as opposed to, well, I'm saving X dollars, or I'm fixing more bugs or whatnot. Hopefully they're delivering more high quality product as opposed to anything else.
Yeah.
Right? Yeah.
I would agree with this ending, right? That measuring developer productivity alone can be a red herring, and fostering a culture of continuous improvement and discovering strategies to better instrument workflows, and from there measuring the tool chain and get actionable insights. I think that is probably a good place to be, and striving for
I
that
agree.
is appropriate.
I agree.
All right, so let's move along, right? So what is next? What is open insurance? So what is open insurance?
Is there an open insurance? So this article was a fair debate amongst the two of us as we prepared. The title is intriguing. What is open insurance? And is it a tech play or a data sharing play? But I read through it, and I'm sure you browsed through it too. So I felt like it was a little inviting topic, but I felt like this is too premature, or maybe even doesn't have a whole lot of teeth, at least in insurance, particularly in North America, given the nuances and the complexities. So I felt this was a nice to read article, but not a whole lot of merit.
Yeah, I think for me, it just reminded me that there's a lot of sort of patterns that come up in other markets in Asia and Africa and you know
Or from
maybe
banking and
the
healthcare and
Pacific Rim area, Australia as well. Yeah, they are successful in those markets. They're different than the North American market, and so those companies have a hypothesis that let's go to the bigger market. And when they try to enter, what they find is that there are some very significant structural differences in North American insurance markets, which create hurdles. And what is seamless and effortless in let's say, a European market um, ends up being very full of friction when they try to roll it out in the U.S.
correct.
So we'll see what comes of it. Probably something worth keeping on one's radar, how this progresses. But I don't think that there is much to do with this at this
I'm
point in time.
curious, Samira, just a curiosity question. Do you think organizations like Accord have a role to play to create an open insurance standard in terms of either they already have a standard, but can they use that power to create an intermediary marketplace or a facilitator type entity for creating an open insurance ecosystem in North America?
Yeah, so I think the standards bodies will have a role to play. Who will have the bigger role, how impactful it will be, when it will happen. This all starts to get into like that prediction kind of space, and I just generally stay away from it.
From it, I also think that carriers have American market is interesting, right? Carriers have a much more stronger role to play. So their ability to cede control to a central party to do some things like this. So I'm not too bullish on this one. To the extent that they're happening, I think we'll touch on the next topic, right? It's already happening.
Yeah, so LexisNexis Risk Solutions feeds life insurers hungry AIs.
What a beautiful title, right?
Well, it's certainly not as mouthful as Ebix reaching a
That's about
stalking
right.
horse
Yes,
agreement, but
that's right.
yeah. So look, this is interesting. Again, I probably will stay away from what specific role does LexisNexis have, but to your earlier comment, right? Organizations that have data or facilitate exchange of data, and LexisNexis certainly is one such org. Accord would be another. MIB in the
Life
life
space.
space would be another example. So
Verisk on the PNC space.
Verisk has a lot of data and facilitates exchange. Yeah, so these kinds of organizations definitely will have a role in feeding training of models and testing of models. Uh, the interesting thing, right, is that how successful has the adoption of third party data been pre AI? Right, that we start thinking about it feeding the quote unquote hungry AIs in the future. So
Yeah, I think this whole idea around I think the data analytics has always been there, but I think what I'm seeing trends from the projects that we're doing at X2, as well as what I know of happening around the marketplace, is there is a higher degree of value in gathering as many sources of data, but also really predicting to a higher degree of accuracy of whatever they want to predict, right? Whether this particular person is has a higher propensity to buy. Like we've always talked about propensity predictions in the data space and insurance space, but I think the quality of those predictions and the amount of data that can feed into that quality of predictions has just improved significantly in the last, I would say, 24 to 36 months.
yeah, absolutely. I think the role of data, right? We just cannot diminish it. I think in one of our earlier episodes, we even identified this as a topic to unpack down the line.
Correct.
That what is an insurance business if not based in data?
Data.
From the very beginnings, technology, enabling that in recent years notwithstanding, right, the role of data has always been core to insurance business. Which gets us to maybe our next couple items, right? One is about Assured Allies, which is a InsurTech startup, InsurTech, that recently raised $42 million for aging population. And I'll let you speak to what they do. And contrast that with crash detection transforming auto claims, which is not about preventing crashes but detecting crashes.
Crashes. Yeah. I see a pattern. I think you're astute in combining these two articles together. So I do agree. It's less about this particular company and what they do, but I think what they're going after is that wearable devices plus a lot of the home automation data, plus a lot of the health data. A lot of that are coming together. And so what Assured Allies is claiming is that they, better than anybody else, they're able to actually predict the behavior of a specific person to a higher level of specificity that one can be used to underwrite. Hopefully, we'll still be able to underwrite, and that there's no bias to not underwrite them. But more than underwriting, but I think they're also saying like, hey, we can proactively and preemptively intervene before an incident could potentially happen. And I think one of the examples was like, hey, these 20 people in this population of 200 people are more likely to fall in their shower. So can somebody call on them to be sure that they have a support bar installed in their shower? I thought that was fascinating, right? I'm by no means I'm supporting or not supporting or speaking for what they can and can't do, but I thought that's a directionally good place to be with data.
Yeah, absolutely. I think it furthers this ongoing, trend, I would say, within carriers that they some progressive carriers, not the company, but progressive in their thinking. Carriers have recognized that their role has to evolve from uh, financing loss to preventing loss, from paying claims to preventing claims, and from being a source of risk transfer to an enabler of risk mitigation. So this shift in what is the role of an insurer, I think, is certainly what I'm reminded of when I look at
I
this
think it's a journey,
company and
though. I
that
think
example.
many carriers are already picking up on that trend, and I've seen some carriers become more educational providers or information providers or content providers as opposed to actually risk underwriter.
Yeah, that's right. And not just underwriter, but a financier of loss. So, and to contrast that, right, I'll just bring back this article, right, which is about crash detection will transform auto claims. No, really. And my reaction to this is, sure, crash detection may have a role in transforming the auto claims process, but would it not be better to prevent crash, which collision detection and all of that is already technology that's available in automobiles? So what role do carriers have in that? Maybe a worthwhile.
I think the last no really was an interesting wordplay on their part. Is I've been following this trend. Like I said, I've known ZenDrive for a while, and they've been claiming like, hey, I can predict this. And then this Sfara company launched a news article 2 months ago or something like that, saying like, their degree of prediction has skyrocketed with whatever they're doing. Like, I don't have the under the hood knowledge of what suddenly transpired, but certainly they're making a claim that now, no, really, there's no doubt anymore that we can actually predict the crash before it happens, or if as soon as it happens, we can predict that it was indeed a crash and that here's all the amount of information that you need. So if you're a claims officer or a technology person supporting the claims of an auto carrier, I think you have a lot of opportunity to investigate that.
Yeah. Certainly worth looking into. And, the specific companies maybe not of interest, but
the space is definitely growing. I mean, $50 million, right? $50 million for that company. So something must be right.
Yeah, that's right.
Yeah. So hopefully that was useful for our audience, Samir. I really enjoyed finding these articles that would be of value to our audience. Also made me feel like we're doing something different. You and I read a lot, we educate ourselves, but we thought, hey, this is an opportunity to share.
Yeah, that's right. And it's the time to give, and this is our way of giving. And I hope you have a good time with your family and good holiday season. And I wish that for everybody listening in and watching in as well.
Likewise. Happy holidays, everyone. As always, really appreciate and humbled by the support. We have hundreds of views now. I think we can claim that we have hundreds because we have 100 and we crossed that 100 number. But joking aside, I believe the right audience is supporting us and listening us and following us. And we hope to continue this in 2024. So wishing you all a very great and terrific 2024.
And that's a wrap for today's conversation on PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.